everyone. This is Simon with AvaTrade, and we're starting our weekly webinar, Inside Circle Interactive Trading Conversation. I see some new faces. Welcome, everyone, especially for new faces. My name is Simon. I'm an account manager with AvaTrade, and starting our weekly webinar, Inside Circle Interactive Trading Conversations. A few things about myself, so get to know me a bit. I'm a senior account manager with AvaTrade, Simon Friedman, that's me. I've been involved in trading since June 2000, so it makes it more than 24 years. As I usually repeat myself saying it, I've done prop trading in city for 11 years from year 2000. And after 11 years, I stopped being a prop trader and I just continued with the industry as a trader and also started to mentor and educate others. And I'm very happy to have this great opportunity to be assisting our customers at AvaTrade. The agenda of the webinar, we ask questions, specific questions about assets, different markets. We discuss, analyze, and try to make sense of things. Risk warning, you can find a full statement at avatrade.com website. And of course, everything we do here is purely educational. We do not suggest any trades. Social media channels, please feel free to subscribe and follow us on Telegram, X, and my favorite YouTube channel, where you can find a lot of information also. All the webinars, including this one, are being recorded and posted on YouTube. So if you are missing a webinar, any webinar, you can find it on YouTube and recording and watch it at your convenient time. Okay. I have a few questions here that we received, so I wanted to address them as we warming up. And as I will address the questions here, I would like for you to prepare the question again for new people and for regulars, just to remind us. We discuss specific markets. You want to ask the question about any currency pair, index, stock, commodity, whatever it's on your mind, just write your question the same way you were confirming that you could hear me and see the presentation. Just in the questions window, type your question, okay? Meanwhile, these questions are not exactly on the topic of the webinar. They're not really specific markets questions, but I think they are important, so I will address them. And if you don't mind, start building up some questions in the question window, so we'll get to them after I finish with these questions. So the first question was asked, when it comes to CFD trading, how do you personally approach stop loss and take profit orders? And I actually like this question a lot, and that's why I actually choose to answer this question. You know, you can ask people around, do they use stop loss and take profit? Don't they use stop loss, take profit? How to use it? If I sit in front of a computer, should I be using it? And so on. I can't recommend or tell you what you should do, but I'll tell you, as the question was kind of addressed to me, I'll share with you what I do. And I think most of the traders in the world that are in industry for quite a while, 10 years more, survived by having a concrete plan, a specific structured plan to manage their money and to manage their risk. So the money management and the risk management. So I personally don't leave any trades without stop loss. Because, yes, you can say, yeah, guys, I see, by the way, you're sending the questions. Please keep on sending them. I'm going to address these fundamental questions in a way, and then we'll go to specific markets, because I think these questions are really really important. So I know it's going to be beneficial for everyone to get the answers for this. So back to stop loss. You know, some people, I have customers even here with AvaTrade, they said, you know, I'm in front of the computer, I don't use stop loss and so on. And I share with you a small example. Actually, I still remember the company. It was so But there was totally different environment. There was back when I was on Wall Street, one of the prop firms, and the name of the firm was WorldCo. Uh, I was doing fencing back then. I haven't done it for many years, and my coach asked me to on my lunch break to go with him into one of the schools in Manhattan to help him to do presentation because he was going to teach fencing in that school. He was kind of trying to get the position there. So I said, of course. I took my equipment. We went there, got dressed, and so uh, before I went there, I just left. There was a day where AutoZone, when the auto part company was reporting, and I just left a naked trade without any protection. And I went, and that trade cost me a lot of money. I don't remember how many thousands of dollars. I mean, it wasn't the end of the world, but it was a big loss. So I always remember that. I remember the stock. For many years, me and one of my partners, we used to laugh from that. So why am I giving an example? Sometimes you think you're in front of a computer and so on, and I'm just trying to explain, like if I were trying to explain it to the 5-year-old, because I like to explain things in a simple way. So you receive a phone call, your wife called you, your kid called you, you had to go to the bathroom. I don't know, you got a delivery, UPS guy came, you got off your desk, you went, something happened, things went, and you lost more than you know, we're not talking any critical things, losing your life savings or anything, but it doesn't matter. If you're not in control, anything could happen. So again, going back to seriousness, ask any trader. They all use stop losses. Take profits is a different thing. Take profit, probably we can argue, is it 100% necessary? You can live without it. Okay, worst comes to worst, you get less profit or you miss that profit, take profit opportunity. But again, a lot of traders use both and also have a special or certain ratio. If some like to have 2 to 1. If your stop loss is risking you $100, so you take profit. Some traders are trying to have at least 200 or 300 ideally. So this way you have a space for mistake because you're not going to have 100% hit rate in your trading. So therefore, we could establish that stop loss. Like I personally, if I open the trade manually in the market order, let's say I click the button, I'm in the trade, immediately I put the stop and I put the take profit because I have things to do, I have work to do, I have kids to take care of, other things. I don't need to worry about it. But it's more than that. I do my homework before I place the trade because if that stop loss doesn't make sense in accordance with my account size or my rules, I just simply don't enter the trade. That's why this question is it's much deeper than we can answer in 5 minutes. So I do my homework. I calculate if that trade works. If I have a potential profit with a stop loss that fits my risk management model, then I enter the trade. I put a stop loss, take profit, and I don't play because your mind is going to play with you. And this we all went through it. Even now, to be honest with you, sometimes I really bail to it. When your stop loss is about to get hit and you did all the calculation and then your mind is taking you hostage. And then you move your stop loss, then you move your stop loss. That's why you do your homework before. You calculating things. This is the right stop loss. Is it percentage of your equity? Is it technical stop loss? Is it a combination of both, which is probably the best? You do it. Now, if I put a pending order, it's automatically being supported by the stop loss and the take profit there as well. So if my position gets open on my pending order, it kicks in right away with stop loss and take profit. Now, I have some customers in South Africa, and they complain that sometimes there's electricity outage, there's internet outage, and I just tell them, if you use the stop loss, you have nothing to worry about. The whole country could be without electricity or internet. If you open the trade and you set up a stop loss, it's on the server. Your computer, your phone, your laptop, whatever it is, doesn't have to be on. If the position, if the price of the asset reaches your stop loss, you'll be out, right? It's very now also very important with stop loss to realize the stop loss is not guaranteed. So if it's over the weekend or you have a spike on NFPs about to happen on Friday or any other important numbers, you might be getting a fill a little bit worse or a lot worse than your stop loss. So there's no guarantee. Stop loss is a trigger to the market order to close your position. Okay, so that's kind of a short version to a long question. All right. Now, second question is, what economic events or reports do you typically watch out for when trading CFDs and indices and currencies? These are common things, right? We all, if you take it in a level of importance, especially these days, it's all about interest rates or interest rate decisions. Press conference followed by that, especially Mr. Powell, the chair of the Feds, NFP numbers, employment numbers, any other special events that to do with inflation. Or today we had the GBP numbers or GDP, gross domestic product numbers from the U.S. Important numbers. Also, if you're using economic calendar, you can actually see the level of importance. If you see that the most important level of the news or announcement, those are for some reason are important. So definitely important to watch them. Again, there's sometimes questions, should I trade on the announcement before or after? It's up to you what you want to do, but definitely you should be aware of certain things. And like next week, we have another interest rate decision from the States. So you know it's going to be affecting US dollar, it's going to be affecting gold, it's going to be affecting equity markets and so on. So you can also see when you check the economic calendar, you can click on that, and sometimes you see actually the historical moves, what happened if certain things happen certain way. Okay, so prepare yourself for that. Now, the last question that was sent before the webinar: how do you decide which markets to trade CFDs on, and what factors do you consider before opening the position? Okay, now this is a broad question, and I like to approach it in a very simple way. You know, you need to trade something that you connect to, something that you understand, right? Now, you can say I'm a new trader, I don't understand anything, I'm not connect to anything, and which is not true, because if you're trading, if you live in the UK and you're trading pound, a British pound, you know better than I do. You live there. You go to supermarket a few times a week. You see, are people happy about the prices? You see the economic situation there. You see that, you speak to your friends. Are they being hired, fired? Are they happy being employees, and so on? So something that you connect to. Like I know I have some customers in South Africa. They like to trade local currency. South African rand. I have customers in the Middle East. They like to trade oil. A lot of them work in the industry, so they know it. So find, first of all, something that you like to trade. In my personal situation, it's different because I've been trading for quite a few years, more than 24 years, and I follow a lot of markets, and I do a deep research every week, and I do webinars every Sunday for market reviews. So I follow a lot of instruments and a lot of markets. So I go through them and I see what could be potential for the week, and then I choose from there. Start also, if you knew, start from fewer instruments. One, it's probably not enough because there are days that your one instrument wouldn't be moving. So try few, and as you get better and gain more confidence, you can add more to your portfolio of instruments to watch. Okay, all right. So I think these were good questions, and now we go. I have some questions here from the audience now, and I hope that we get more questions, guys. Again, just to remind you, we have up to an hour, and we have quite a nice audience here. And so far, I just got one question on a few instruments, from Charles. So we're going to address that now. So Charles is saying, can we look at Microsoft and Meta ahead of earnings? Good question. And they are reporting today. I believe so. So Meta and Microsoft. By the way, we had Amazon reported yesterday, and the stock was up. It gapped up right here. I just want to show it to you, even though it's not the question. It gapped, so it traded higher in the pre-market. It gapped, and it's holding that again right there. So we have Meta and Microsoft. So let's start with Meta. Meta last report was super strong. As of now, as you could see here, Meta gapped today. A lot of tech, there, used to be a FANG group. Now it's they call them the Magnificent Seven stocks, right? You have Apple, Amazon, Nvidia, Microsoft. Sorry, my brain is a little bit. I don't want to search it and pretend that I know it, but those are the 7 major stocks, and Microsoft and Meta definitely within those stocks. So as you could see here, the way to look, I look at the chart. First of all, I start with the monthly chart, and I see that we are at the all-time highs, as you could see here. Last month was very strong. This month is also about half of last month's move, super strong. Now, if you go on the weekly chart, so you could see here where the move to the highs, where the consolidation, and now we retesting the highs on the weekly chart. And the daily, of course, in sympathy, market works on speculations. As they say, you buy the rumors, you sell the news. So as Google reported great results, so everybody is expecting the other stocks, and they're probably right. Again, I don't know if I should say it, but they could be right because most of the stocks in S&P 500 so far, majority of stocks beat the earnings. Okay, there's some disappointments, of course, but a lot of them beat the earnings. By the way, I think Reddit, it's a recent stock that had IPO, I think less than a year ago. I could be mistaken. Also reported yesterday, and the stock was up, I think, 28%. So there's a lot of hype, a lot of excitement. So here we go. We gapped, and we're pretty much flat on the day. And that's a sign that they're not sure. We are at the highs, so it could be priced in. If they need to beat really strong for it to go higher, and if they disappoint, we'll definitely go slight lower. That's no brainer. I mean, that's just logic. Okay, so but as you could see, the opening and the closing price are about the same, and we are quite a few hours into the session already, right? So here we go. Open is 595.77, and the close is 595.20. It's 50 cents different, right? 53 cents to be precise between opening and close. A little bit in the red. So that's your Meta. And Microsoft, if you take Microsoft, they've been suffering a little bit here, and it's all AI related. As you can see, as you probably know, Microsoft was the first and the biggest investor in the Open AI project. I don't know how many billions they invested. And somewhere down the line recently, a few months back, they said they abandoning the project. They kind of didn't want to be involved. Again, it's their job to make decisions. We're not here to judge them, but it affected the stock really negatively. It's right here where they moved down. And as you could see, we also gapped today, Microsoft. And we are almost flat as well. It's a little bit opposite of what we just saw on Meta or Facebook. We a little bit in green, and if you see the opening and close, the very narrow gap between them. So opening was 436.85 and close 437.20. Well, it's a flip side. It's about 50 cents to the upside. All right. So again, good earnings could push it. We just broke through this the past few days. We broke through the a trend line that was moving lower, as you could see. and we could see the move. But if we do move higher, we're probably going to face a little bit of resistance here around 441, 442 area. We are above all the major moving average, 50, 200, and the 100. So we are looking up. Let's see what earnings will do. Good questions. Thank you, Charles. Okay. Kosti is asking, what do you think about NASDAQ? Elections are coming. That's for sure. And NASDAQ, again, NASDAQ did great yesterday. On the futures, we didn't hit the all-time high, but on the cash, the index itself, I think yesterday was a historical high. What you could see here on the platform, these are the futures, right? The current future contracts for NASDAQ. We are close to the highs, but I think, if I'm not mistaken, the cash index did make all-time high. So what you see here, yesterday's move was very strong. We broke through the recent resistance from the mid-October here, and today we're down a little bit. So I appreciate that you mentioned the elections. They are coming on the 5th of November, and I think the market is just trying to survive till then, right? Definitely, you could say it's conspiracy, Democrats, blah, blah, blah. I don't know. But it's very simple. The biggest, if you go a little bit into politics, which I don't like to do, I don't really know anything about politics, but I know a little bit about logic. So if you hear any sayings of Democrats, they have this card in their sleeve, and they keep on saying that they received a bad economy from Trump and they did it great. Look at the stock market, recovery after COVID and other things. So definitely they do everything possible to hold the market and push it higher so they can bring it to elections that, quote unquote, we, the Democrats, created a great market. All right. We're not going to, I'm not going to comment on that, but that's their position. So most likely we're probably going to be kind of up and down, not doing any major things. We might even hit all-time highs. We are hitting it. I mean, a few days ago, a week ago, 2 weeks ago, we made new high on S&Ps. Dow Jones is selling though, right? And a lot of it to do with McDonald's, by the way, with the E. coli bacteria. Funny. I was just having a little deja vu. As of Friday, 75 people in the States were infected, and I just had a flashback when I just came to the States. In the beginning of the 90s, there was a similar story in the Jack in the Box. If you heard it, I think it was around 92, 93, where the same bacteria affected from the beef, and 4 kids died and 750 people got infected. So I hope this issue won't get to that size, but definitely it's not good for McDonald's. So since then, we had to move down. Also, banks affected it. The Dow Jones is down. Why did I go this route? The question was about the elections and NASDAQ. So after the elections, we could see the pullback in the market. Even though a lot of people are very bullish, the earnings are great. They're expecting more interest rate cuts. There's about 100%, I think 95% probability that we'll have another 0.25% cut 2 days after the election by the Feds. So we'll see. And something that I learned, I hope it makes sense to you. Every time I have a strong conviction about something, I'm convinced and I'm 100% sure that's why I feel, cocky about it. And I enter the trade. I'm being stubborn and neglect what the market's telling me. I get sometimes punished by losing the money. So as traders, I don't think we should be predicting the weather or the market or anything. We should just approach trading in a simple way, look for opportunities, and know if if the risk that we're taking in every single trade is proportional risk, and move on, take each trade one at a time, and not to try to make predictions, especially global predictions. Uh, one of the stories that teaches you, when the oil went down with the pandemic, the crude oil went down briefly to negative territory, still a mystery to me. But there were groups of PhD professors. They ran this hedge fund, and they had great returns. And on that move on oil, they just lost all the portfolio, I think, by being stubborn, because they said the history repeats itself. They're absolutely right. It's all goes in circles. Look at the oil. Since then, the oil came back to 130, and today it's trading around 60, 67, 68. But they got wiped out. So in theory, they could be right, but in life, they lost a lot of money. Okay. Kosti is asking another question. Gold, I believe, will range, but oil may get back to 80. You could be right. Gold is just showing a high uncertainty, even though it just proves the theory that all this move in the market could be not so sustainable as well, right? So if you take gold, I think we just made all-time high again. Here we go. So today the 10-year yields went down, dollar went down a little bit, and gold continues. This is the US dollar index, right? And gold is just testing the skies. There's nothing to hold it from moving higher. Every pullback was an opportunity. The buyers came in. So that's something to pay attention to. There's a lot of factors. There's a uncertainty factor, safe haven. That's what gold is famous for. So when people are not sure about what tomorrow will bring in investing or life, or with all the crazy wars that we're facing in the world, so they say, I'll just use the old recipe like my great-great-grandparents did. Just going to hold some oil, in this case, electronic, but still. And oil, it's very confusing. I think China needs to bounce from here for oil to have some sign of life. But as of now, crude oil is not doing great. Taking into consideration all the issues and mess in the Middle East, normally oil would be much, much higher. See right here what I mentioned to you. We did go to 130, 2022, right? And since then, we've been slowly moving lower. And on the daily chart here, we're not looking so happy. This was a gap between the contracts, as we know. And we're not really rushing into matching or closing the gap. The current contract is $68. Now, is it going to be around 80? Could be. Some are talking that the Saudis are not doing anything to bring the price higher. And there's some opinions there that if oil hits 50, Russia would choke and not being able to continue the war with Ukraine. So maybe that's also on the map, on the big picture. I have no idea, but those are just arguments out there. Okay. So those are gold and oil. Ali's writing, I'm just going to read the whole thing with you together. Hi, Simon. The British Chancellor announced the autumn budget forecast statement 12:30 GMT today, and GBP/USD moved 100 pips from 129.40 to 30.40. Firstly, what do we look for in budget statement like this to analyze the favorite impact of the volatility? Secondly, why is an orange folder and not a red folder considering it move? I tell you the truth, Ali, I'm not big in these statements. I'm not going to pretend that I know. I really don't know. And especially the politics and economy in the UK, I don't really understand much. But we can take a look at the chart, what happened. You see, the volatility happened here. But I think I'm not sure if it's connecting with that, and I'll tell you why. You saw around the same time. This is where the GDP numbers came from the U.S. and dollar moves. I think this is more dollar. I could be 100% wrong. Again, I'm just sharing with you what I do know. And if you take dollar index at that time or any major currency, then let's take euro dollar. Take a look. Euro dollar had this big move as well. So I'm not sure if what you're sharing. I mean, it could be it's important, but when the GBP numbers came, everything moved. The market moved. The equity market moved. The dollar index had a big move. Okay, this is a 30-minute chart. See? This is 5-minute chart. We moved up, then we moved down again. So I'm not sure. I cannot answer your question in regards to the statement and the budget. I have no idea. Maybe you can just look at that report, and I'm sure there's some smart people online on internet. They have something smart to say. I have no idea about this. I apologize. Okay, I do have another question, so I'm not going to pretend I don't see it. So we're going to go right back. Ali's asking what happening to JPY pair. Good question. I think we have an interest rate decision coming out this week, I believe so. JPY has been super tricky. Let's take dollar yen as a general thing. We had a very nice journey, as you know. First of all, in the long term, it was a super long journey on the weakness of yen. It started somewhere here, January 2021. We're talking almost 4 years ago, right? Had a steep move to the upside. It just reminds me actually this move right here. I remember I was working with some customers back then, and a lot of them were shorting dollar yen, and a lot of them lost their life savings. And it just also, it's a good example of being stubborn. As we went higher, there was a little correction. People thought, okay, this is it. 100 is the peak, so let's short it. And this thing just kept on going higher until it hit the peak, June of 2015, 124. Imagine this pain. Now, we were playing for a while, and then we just continue higher. What happened there, as we all know, it's people that don't follow the Bank of Japan. The Bank of Japan didn't do anything for about 17 years. They were trying to save the economy, and they brought the interest rate to a negative. The interest rate was minus 0.1% for a very long time. And then recent months or a year ago, I'm too bad with dates, don't remember everything. They finally brought the rates to zero, and then they had another rate hike. And then we had a little bit of a correction here. So this was when they started the action after we hit almost 161, I think. That was July. We hit 161.5. And since then, we went lower. It was a steep move, strong reaction there to the moves of Bank of Japan. And then we reached the low here of 139.57, and that was mid-September. Since then, we're slowly stepping up again. We just recently broke through the 200 moving average here. Now, they might keep the rate steady. They might raise it. They also have now political issues. Said that the government was kind of supporting the moves of Bank of Japan coming out of the long term of negative rates and so on. So they might support further interest rate hikes. But then I think the past few days, there was a move, I think somewhere here on the yen weakness again, because there's a little bit of uncertainty. Again, I'm not too big in politics, and Japan sometimes have the issues in their ruling part of the government. So I'm not sure, but you could see here the last few days, it shows you uncertainty, right? This move that we had on the 23rd ended up at the high 153.18, and for the 3 sessions in a row, This was the Sunday gap, right? But 3 sessions in a row, we're pretty much in the same spot. So they're not sure. They're waiting for that decision. And that's what we have. And I like to also see, because this is one-sided, right? You have also a dollar affected it. But if you take yen against other currencies, we also approaching serious level. Swiss franc, Japanese yen is hitting resistance here. That's where after a failed rebound, we actually went lower. You take Aussie JPY, also we're facing current levels of resistance right here. CAD JPY, we're stuck below the 200 moving average. Euro JPY, we are above the 200 moving average. And if we are moving higher, we might actually face the upcoming resistance here. So technically speaking, this recovery could be continuing until we hit the strong resistance here. Pound, the same thing. You see, we all across the board on the yen, somehow we stuck at the previous resistance from which the excessive sell-off started. So we could see actually it's either a positive decision by Bank of Japan, or maybe positive comments, and we might see a continuation, or we might as well see breaking through this resistance, and that would trigger some covering of the shorts, because some traders are probably selling short around this area, thinking the way we are discussing now. So we came here, the sell-off happened, a lot of actions around this, so let me try to sell, right? And if the move happen to continue higher, they're going to be disappointed and cover the positions at some point, and they will create more energy for it to move higher. So again, we're not going to guess, but we established that Japanese yen at these levels could probably face the support in this case, because it's the opposite, right? The move up means the yen is weak, right? So you might regain some strength, and all these pairs could move to the downside, or we might see continuation and retest all-time highs. Everything is possible as well. But as of now, you take few pairs that we went through, it looks like we're having a hard time going higher here. So maybe yen will return to some strength. All right. Ali, great questions. All right. Okay, I don't see any questions. So I want to thank you all for participating. I hope this was useful and you gained something from the questions and the answers. Again, we just bring the social media back. Please feel free to subscribe, click on the bells, especially the YouTube channel and the X and the Telegram. We have a lot of things coming out on a daily basis. Also, if you are watching this on YouTube, feel free to click on likes, share with people, subscribe, and so on. Thanks again, and follow the events of this week. We have a lot of companies still reporting. This week is, I think, the busiest. We have about 150 out of S&P 500 companies reporting this week. And of course, we have NFPs on Friday, and next week, elections in the US and the interest rate decision. Thank you all. Have a wonderful evening, and we should be back next week. Take care.